Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. I thought I'd take a technical look at some of the major currency pairs after the FOMC rate decision. The Fed kept rates unchanged. They did take out the idea of tightening, yes, but did they say that easings are imminent? No. And that has a market sitting in fairly same levels as before the data. The NASDAQ index is down about minus 1.37% currently at the moment. That's not a lot different from the pre-market levels. The U.S. yields are maybe a basis point or two higher than they were, but still down on the day. We wait the Fed chair's press conference ahead, where he might give additional light as far as what the policy is going forward. But given the statement, it doesn't seem like he's in any hurry, or they are in any hurry to move one way or the other, and in particular to the downside. So let's take a look at some of the technicals that are in play here for our major currency pairs. We'll start with the euro versus US dollar. Looking at the 4-hour chart, what have we done? Well, we're back below the 200-day moving average, or the price moved below the 200-day moving average. We did come down into this swing area. This swing area we talked about a lot in the videos today and more recently is defined between the 1.0803 and 1.0824. Market came down here, broke above that level, and then returned to this area in trading last week. And in trading this week, we moved below that level, tested the 50% midpoint, and bounced off of that level. But trading here today, the market low came down to that low of that swing area, and off of the FOMC rate decision, we came down into that area. But we are back above that level. We are below the 200-day moving average at 1.0840. That is going to be a barometer for traders going forward. If the price moves above it, it's going to be a little bit more bullish. If we stay below it, like we are now, then it would be more bearish, but we do have these levels to get to and through, including 1.0803, 1.0793, and then the 100-day moving average at 1.0774. Let's take a look at the dollar versus yen next. And again, we'll take a look at the 4-hour chart. And you can see that the price low in trading here today before the FOMC decision came down into this swing area between 145.96 and 146.219. Since then, the price has moved higher. We're currently trading at 146.70, which is above this swing area here between 53 and 65, but below the 100 bar moving average on the 4-hour chart. That's this blue line in this chart, and below the swing area right through here. That 100 bar moving average comes in at 146.98, and the current 4-hour bar high price came in at 147. Looks like 55. No, a little bit higher than that. 146.87. So below that 98 level. If we get above the 100 bar moving average, above the swing area, up to 147.06 or 7, that would open the door for further upside momentum. If we do find sellers against this level, then rotate back down below the 146.53 would increase, tilt the bias a little bit more to the downside for the dollar versus yen. Looking at the dollar versus Swiss franc, we did move sharply lower in trading here today, breaking below the 200 bar moving average in the 4-hour chart and this swing area right through here down to 0.8566. But the momentum could not be sustained, and we started to move back above the 100 or the 200 bar moving average on the 4-hour chart. We also moved above the 100 bar moving average on the 4-hour chart, but fell short of the 100-hour moving average. We're currently trading in between these two moving averages. The blue line on the 4-hour chart at 86.12 and 85.82. And if the price is able to get back above the 100 bar moving average, we look toward the 100-hour moving average and 200-hour moving average, get above those levels, and the bias increases to the upside for this pair. On the downside, we're going to need to get below the 200 bar moving average on the 4-hour chart. As you can see, the low price just below on the current hourly bar came down to that level and found support buyers. So be aware, be prepared. That's going to be the key barometer on the downside for the dollar versus Swiss. The only way that the bias is going to turn more negative is if we break back below that level. Let's take a look at the sterling versus U.S. dollar. In this case, we'll look at the hourly chart. And Unfortunately, the Fed decision is not going to get the market outside of its doldrums here. The up and down trading range that has been confined this pair going all the way back to mid-December. And before that, the price is trading a little bit below the 100 and 200 hour moving averages after trading above and below and trading here today. We tried to the upside here, but now back below. We're in between those levels right now, so the market's trying to make a decision which way it wants to go for this currency pair. We'll use that level as a barometer for the up or downside, or more bullish or more bearish for this currency pair. Finally, let's take a look at the dollar versus Canada. And if we look at this currency pair, the dollar is trying to move higher here, and in the process is back into this yellow area here. This yellow area is defined by a number of different swing lows going back in time. If we get above 134.14, that would open the door for the 100-hour moving average, 100 bar moving average in the 4-hour chart, 200 bar moving average on the 4-hour chart. All those moving averages come in play between 134.32 and 134.51. If we, in order to move back to the downside, we need to get back below the 200 bar moving average on the 4-hour chart. That level comes in at this level right here at 133.82. As long as the price remains above that level, the bias remains more to the upside. So there you go. I look at some of the major currency pairs after the FOMC rate decision, waiting on Fed's Powell. Next, my name is Greg McCloskey. Good fortune with your trading. Bye-bye now.